Hi, everyone. This is Trish May, and I'm joined with Craig Collins. Together, we are your American Dream home team. And today we are talking about a really popular topic these days, in all days, credit. What about credit? What are some things in the report, and how does credit matter between the different types of loan products, generally speaking? So, Craig, I know you must get questions, or at least this topic has to come up every day for you.
Yeah, absolutely. Credit's super important, right? That's one of the main drivers of not only qualifying for a home loan, but then also, calculating and determining what interest rate people are going to qualify for. Everything in the mortgage world is kind of risk-based. So your credit scores are, a good way for lenders to get an idea of, if you're going to pay your bills, if you're likely to repay that debt on time. For mortgages, most often, most mortgage lenders use what's called the FICO model. So it's the Fair Isaac Corporation, FICO. And that model is what we're generally seeing across the board for most mortgage lenders. A lot of folks who have Credit Karma or maybe monitoring on their credit cards typically see something called the Vantage model. The scores are in the same ballpark. So it's a great way to get an idea of what your score is, Credit Karma and things like that. But it might not always be exactly what your qualifying score is, when you're applying for a home loan. But yeah, just like you said earlier, basically the minimum credit score is specific to which kind of home loan you're using. So if we touch on kind of the most popular ones, a conventional loan, which is a loan that's not backed by any government agency. So there's a little bit stricter guidelines, and they're set by Fannie Mae and Freddie Mac. For a conventional loan, the minimum credit score is going to be about 620. Anything above a 620 and above, you're going to be in good shape for qualifying for a conventional loan. If we don't have quite that high, we can take advantage of an FHA loan. An FHA loan is insured by the federal government. It's insured by the Federal Housing Administration, FHA. It's a little bit less risky for lenders for that reason. So they're less strict, and it's a little bit easier for folks to qualify for borrowers to qualify for those home loans. In saying that, if you put down 3.5%, which is the minimum contribution for an FHA loan, we can generally get down to about a 580 credit score. FHA will allow for lower credit scores, but in saying that, the down payment, the minimum required contribution goes up. So credit score goes down, but you are required to kind of put a larger down payment. Last but not least, of course, for the folks who are veterans, anyone who kind of checks those boxes and can use a VA loan, that's a great loan, and it's backed by basically the Veterans Administration. So again, it's a little bit less risky for borrowers, and that's reflected in the rates, and it's reflected in the credit score. They can also use a 580 credit score to qualify for a VA loan. What's great about that is, there's no PMI, there's only one upfront financing fee, and it's 100% financing. So there's really no down payment required there. So 580 for government-backed loans, FHA and VA, and if you can qualify for a little bit higher, 620, you can get in the door for a conventional loan.
That's terrific. Those are very attainable. And I know credit can be a real worry for some folks who have been through some troubles and so forth. But, everyone can raise their credit score if they set their mind to it and make it a goal. Everyone's credit history is complex, so I'm sure you need to have individual discussions. But can you highlight a nugget or two on what folks can generally do to raise their credit score and maybe get it to where they want to be so they can go into a home loan?
Right. Just like you were saying, everyone's score is kind of unique to them, and increasing those scores is kind of strategic and specific to each individual. But generally speaking, there's a couple really easy things most folks can do just to bump their score up. I'm not sure if you've heard of the Experian Boost. It's on quite a few commercials, and floats around a little bit more often now. And it's actually a great tool. And what it does is it uses non-traditional credit to help boost your score. So things like, your phone bill, utility bills, streaming services, anything like that. It scans for positive payments, positive credit to help your score. And it includes those non-traditional trade lines in your credit. So if you've got something like that, you pay your Comcast every month on time, you can leverage, the Experian Boost, and it might help bump your score up. Some people also do something called piggybacking. This is a little bit more complicated, and it involves someone that you trust pretty significantly, usually a family member or a close friend. But basically, a family member or a friend can add you as an authorized user onto their credit card, onto their credit card account, and basically you can benefit, you can piggyback off of their, good credit, their on-time payments, and their advantageous credit history. So two quick and easy things that folks can kind of do immediately if they're struggling with credit or if they're kind of on that borderline to maybe get them over that hurdle.
That's terrific. Those are really great nuggets, and I don't think people hear about those in all places. So that's really informative stuff. Awesome. Well, I know
Absolutely.
that folks would really benefit from talking with you personally just about their own unique situation. So I hope those who are wondering will reach out for an appointment just to review some credit, and you can give more detailed tips to everyone, based on their unique circumstance.
Absolutely. I mean, if you've got the time to prepare, it's always great to connect with a lender, make sure your credit score is where you need it to be. And if you've got some time to improve it and work on it, even if you have good qualifying credit, it's always great to improve it. Like I said, that lower risk is going to be reflected in your interest rate. So improve your credit and save yourself some money.
Fantastic. Right. It really does pay off, doesn't it?
Absolutely. It really does.
Good, good. Well, Craig, thanks so much for talking to us about credit. I know credit is a topic we're probably going to be exploring more in the near future. So folks ought to stay tuned for a little bit of a series we will have on credit coming up. So, we'll look forward to the next part of that.
Yeah, absolutely. We're going to do a little bit deeper dive. So if anybody has any questions or topics they want us to cover in that, comment below or reach out to us individually.
Absolutely. All right. Well, Craig, thanks a lot again. And folks, we will look forward to seeing everyone next time on the American Dream Home Team.
Bye, everybody.
Bye.